Hi traders, Tuna Upan here, founder of Master the Markets, Elite Trades Conference and the Traders Open Day. So today I want to share with you this topic on a price bar pattern you must know, okay? So this price bar pattern is actually a reversal pattern, okay? It's actually a reversal pattern and it's really good because as you should know by now, reversal patterns are actually meant to capture big moves, okay, really big moves. And that's really would be one of our interests to do that, as especially if you're a swing trader as well. So let me explain this bar pattern, all right? So what first thing first, we are really looking at this bar pattern is that we're looking at an uptrend. Let's say if you're looking to short this market. Now let me just write it over here. So let's say if you're looking to short this market over here, it's a short example, right? And I'll do the opposite for the long as well for you guys. So what we're really looking at in this uptrend, you know, just like rather than anyhow just saying that, you know what, this is an overextended market, I want to start shorting it right now. No, let's get a few steps in place. And this bar pattern that I'm just going to explain to you before you actually short the market, okay? So let's look at these 3 steps actually you need to look at. So point number one, what we need to be looking at is firstly, the market needs to be in an uptrend, okay? It needs to be in an uptrend. That's the first point, right? It needs to be an uptrend. The second thing is what we're then looking for is for the most recent swing low, okay, which is over here. The most recent swing low to be taken out, okay, to be taken out. So like this. So it's broken this over here. Now it has broken that particular level. Now when it's broken that particular level is what we call actually as price structural failure. Okay, so that is what we call as the PSF. The price structural failure is the second one that you are actually looking at. Okay, so that's the second one. It needs to break the last swing low. Now the third thing is that it needs to now retrace. It needs to retrace now. And the most important thing in that retracement is that this swing low has got to confirm, okay? Has got to confirm, right? It's got to confirm. So swing low, confirmation, right? So then after that, once this setup has happened over here as such, then we are good to looking for short opportunities. And that's where we then plan to get into the trade, okay? Now, a few ways, aggressive ways to enter. First, once the swing low is confirmed, you can already put a short order. There's one way of entering it. It's too aggressive. I wouldn't really advise it unless you have all your research really done and all your stats really in place. Now, the next one is you can wait for it to turn and do just a specific price bar pattern. A very simple one is something like this, okay, where it is like falling, and then it's, or we call it like a momentum pivot, and then you can start to enter it. So we call it with minor confirmation, right? So this is more aggressive. The first one is more aggressive, and the second one is just MC, minor confirmation. Or the third one, which is a bit more higher reliability but a bit more late, is where we got major confirmation. Now major confirmation is when this swing high gets confirmed, okay, when this swing high gets confirmed. So these are the 3 ways in which you can enter it, but you only enter it after you've got these 3 points confirmed. So first, it's got to be in an uptrend the market. Second, it's got to go through a price structural failure where it breaks the swing low. And third, it's got to retrace and the swing low has got to confirm. Then finally, the fourth thing is that you're looking for points to enter into the market. Possible target points is possibly one definitely you can look at is for the swing low to be taken out, okay? And actually traders, do you know actually the probability of that being taken out? Have a guess, you know, like what would be the probability of this trade if you entered at 1, 2 or 3 for it to take out the swing low? Now, we know the stats actually. What I want you to do as homework to be quite interesting is for you all to go and look at these patterns and see how many times does it really actually break that swing low that has formed after breaking its price structural failure and retracing. Put all your answers and comments down, and if you still have any queries or any challenges, you can always email us, okay? So these are the things about this price bar pattern that I've just talked about. Now, in terms of the opposite way and how it actually forms, let me just quickly just draw that for you guys, in how it should form for actually a long, okay. Some of you guys who want to just practice it by yourself, actually you can pause the video here and you can just draw it by yourself. If you really want to challenge yourself, that's the best way you actually learn. Now let me just give that to you. So for example, if you're looking for a long, what I'm looking for here is a downtrend, okay. Now instead of calling it a price structural failure, we call it a price structural break, because I'll explain to you why. And then finally, this one has got to be a swing high confirmation over here, okay, is what we're looking at, right. Now, let me show you the pattern how it is. So we got a downtrend like that, right? So we got a downtrend like this. And then finally, we are looking for this swing high to be taken out. And then it reverses, okay? It reverses. And then finally, then it comes back down. So we got a price. So first is a downtrend. That's a take. Second price structural break over here. That's a take. And the swing high confirmation over here as it comes down. And then you're good to go. And as I said, the 3 steps you can look to enter into the market, as I just explained before. Now traders, the final point that I didn't need to tell you about this price bar pattern is so critical, because if you do not have this, the whole price bar pattern is totally invalid. You won't be able to consistently identify it. Now what is that? It's the swing lows. Okay, the swing lows and the swing highs. Because you see, traders, if you do not have a consistent way or quantified way of measuring the swing highs and swing lows in the market, if you don't have a quantified, consistent way of measuring the swing highs and swing lows in the market, you can't identify this pattern in a consistent manner. You always will have doubt whether you're entering it right, or whether you're seeing it right, or whether it's really the right price bar pattern that we're talking about over here. We actually call it a variation 5 setup. Okay, there's 6 variations all together in the market, which forms a trend. This is one which is called variation 5. So definitely go around and look at these setups. If you have any challenges at all, like quantifying swing highs and swing lows so they can constantly reproduce it, definitely email us. We've got indicators which we have put into place, where we have put some algos inside as well, where it can constantly map out the swing highs, swing lows in the market, so as to just help us achieve consistency. Okay, I believe that this video has been very useful. Now it's time over to you now to do some homework yourself. Find these bar patterns and also go and do some research on what is the stats of this bar patterns actually taking out the high or the low for the short. Till the next time, as we always say, stay disciplined, follow your trading plan, and keep trading like a master.